Welcome to both of you. Do you want to just key off of what the bank's analysts were just saying? I saw you both kind of chuckling at the maybe too big to fail comment. And Steve, I just wonder if we're going to have to test that once again here, if things look, things are looking worse in the months to come, this kind of regulatory gray area, and our policymakers just going to have that, okay, well, worst comes to worst, well, we will step up here.
So as our colleague David Favors reported, there is a plan going back and forth about the other banks stepping in. I'm not sure how much they're loving that plan of them stepping in. I'm not hearing they love it a whole lot. I'm pretty sure there's not a whole lot of appetite on the part of officials now to step in and provide a bucket of money with which to wash down or wash off the sins of First Republic, such as they may be. I'm not hearing that that's something that they're willing to do. They're monitoring the situation, as far as I know. But I think they've spoken their piece when it comes to creating this bank term funding program, providing access at the window. And honestly, you can't, if you're a policymaker, sit there and make policy for another black swan event. It's like, well, something bad may happen, so I'm not going to do X, Y, and Z. I kind of disagree a little bit with David about how dire the situation could be.
Really?
But I'll let him have his piece, obviously. But I understand the idea that you can't sit there and say, well, a bank may fail down the road, so therefore I'm not going to hike now.
David, explain a little bit. I mean, if regulators came to you, would you say, listen, don't be too quick to jump into this because it is contained and it's not Armageddon and and everything's fine? I don't know. The last week, even the deposit data, it looked like things were moving around again.
I think things have settled. There's no question they've settled. First Republic's been an issue now since the beginning. Its stock has been, down at 12 to 16 bucks and bouncing around there after losing 80%. I think there's two big questions. One is, are there specific financial instability events that the Federal Reserve needs to react to? And I think Steve answered that question beautifully. The answer is no. They've set up the programs. They're done. They've solved those. And if there needs to be more, there will be more if they become systemic. So it's not going to get in the way of monetary policy doing what it's supposed to do, which is anchor long-run inflation expectations and manage the dual mandate. We've seen that. That's done. Then the question is, what are these banks worth? What is the whole banking system worth in a world where your deposits can disappear and you can lose $100 billion in the snap of a finger, or what happened at SIVB?
Hold on, I'm going to move a couple $100,000 now, right with my phone, right here, right. Oh, a deposit run on a bank because I just picked up my phone.
And to your point about the value of these franchises, Dave, I mean, we're talking about the banks largely trading where they were when Trump was elected in 2016.
Yes.
This has been a terrible. That was 7 years ago already, and so you have to wonder if that's already reflected in some of the valuations, even though plenty would say
Kelly, that's my problem. If you guys would pull up the KBW, the banking index, banking equity values are down, and they're not back to where they were before. And banking equity values matter for banking safety and soundness in a way that it doesn't matter for normal companies, right? It's part of how they might be able to raise money. So to the extent that that is down and remains down, it still suggests to me there are problems in the banking system. And not to mention the joke I just made about moving money, I think that's a big deal.
Or is it just a bad business? Is it just a tough business to be in right now?
It's a business that's changing, and perhaps there is some systemic risk that comes to those changes. I'm sorry.
But I actually think the point is, I think the Fed has all the tools to deal with the systemic risks. We built so many great tools since 08, 09. The ECB used them to deal with the Italian government bond market. The UK dealt with the long end of the gilt market. We dealt with our banks and the residential mortgage hedging problems. We don't have that problem. We can set up financial funding facilities on anything we like, munis, corporates, commercial real estate. That is not going to get in the way of the monetary policy debate. Is the Fed going to hike rates on May 3rd? I think absolutely. They are still fighting inflation demons. Are they going to let financial stability get in the way of that? No. But are there fundamental changes going on in the banking industry? Could it be that we are going to see a significant transfer of wealth from shareholders to depositors? Because depositors now have the ability to go to Apple and get 4.25%.